Good morning. We will pay attention to the perpetual inventory system when we complete journals, ledger and trial balance. The following information was obtained from the accounting records of Carlos Traders. The entity uses the perpetual inventory system and maintains a profit of 50% on cost price. If the profit is on cost price, then the cost price is 100%, profit 50%, and sales price 150%. They will make a profit of 50% on cost when goods are sold on credit. On cash sales, 10% discount is allowed on the credit sales price. So in the credit sales, we will charge them a profit of 50%, and if they buy cash, we will give them discount on this credit sales price. The following balances appeared in the trial balance. All these balances will be transferred to the ledger accounts. If the balances are on the credit side, the balance will appear on the credit side of the ledger. That will be capital, liabilities, and income. Balances that appear on the debit side of the trial balance will appear on the debit side of the ledger accounts. That will be drawings, assets, and expenses. The bookkeeper completed the subsidiary journals up to the 15th of March. He will actually be on leave from the 16th of March and asked you to complete the transactions for the rest of the month. Cash sales according to cash register roll. Now we must remember here that this 21,600 is after the 10% discount was allowed because it is cash sales. When we receive money, we record it in the cash receipts journal. We will indicate that this transaction is on the 16th, sales. And in the analysis of receipts column is just like a till. We put the money in this column, and at the end of the day, we will take all the money out and go to the bank once and take the total amount to the bank. So you will not record this amount in the bank because there's an additional entry on the 16th. The 21,600 will also be shown in the sales column to complete your double entry. We have to calculate the cost of sales. Now remember, when we determined the normal sales price, we took the cost price, added the profit to get the normal sales price. So although you gave them 10% discount, you have to work back to the normal sales price to be able to work out what is the cost price. The credit sales price is 100%. Discount is 10%, so the cash sales price is 90% of the normal sales price. That equals the amount that we received, 21,600. If we want to know what is the normal sales price, the one that we want at the top, divide by the one that we know, 90 at the bottom, and that will give us 24,000. We will use this 24,000 to calculate the cost price. A profit of 50% was made on cost price, so cost price is 100 and the sales price will be 150. The sales price equals 24,000. If we want to calculate the cost price, we will multiply the 24,000 with the 100 that we want to know, divide by the 150 that's known, and that will give us 16,000 rand. So in the cost of sales column, we will enter the amount as 16,000. Issued the receipt to C Gold for 900 after 10% discount was allowed. So this person didn't pay his total amount. We allowed 10% discount. So this amount that we receive actually equals 90%. When we issue a receipt, it is proof of payment. So we received money, and this entry will be recorded in the cash receipts journal. The last receipt was number 121, so this receipt number will be 122. It's also on the 16th. The money that we put in the till is 900. This is the last entry on the 16th. So we can add these two figures together to show that the total amount that we will transfer to the bank will be 22,500. So we only go to the bank once a day to deposit money, not every time when we receive money. Then we have to show this C code, we received 90% of his debt, and that was equal to 900 Rand. If we want to know what was the 10% discount, we will multiply with the one that we want to know, divide by the one that's known 900, and that will give me 100 Rand. So discount allowed is 100 Rand. We will reduce his account with the 900 that we received plus the 100 Rand discount, and in the debtors control account we will show that his account will be reduced with a total of 1,000 Rand. Received an invoice from high traders for 9,000, less 20% trade discount for goods purchased. We bought the goods on credit, so this entry will be recorded in the creditors journal. When we receive an invoice, it means that we purchase goods. They don't indicate that we pay for it immediately, so it is a credit transaction. We will subtract the trade discount immediately and only reduce the reduced amount will be recorded because trade discount will not have any entry. The 9,000 less the 1,800 trade discount means that our purchase price will be 7,200 and the amount that we owe to the creditors will be 7,200. So no entry is recorded for the trade discount. The normal purchase price is 9,000. We calculate the 20% and deduct 1,800. So the amount that we pay for the goods is 7,200 and we owe the creditors 7,200. No entry for trade discount. The document will be number 144. Trading goods with a cost price of 1,200 was sold on credit. If we sell on credit, we sell to our debtors. So that means this will be recorded in the debtors journal. They don't give us the sales price, they give us the cost price. Therefore, we will have to calculate the sales price to record the entry in the debtors journal. The cost price is 100, profit is 50, sales price is 150. The cost price was given as 1,200. So if we want to calculate the sales price, the one that we want, multiply with 150, divide by the one that we know, 100, and that will give us 1,800. The previous document was 577, so this document will be 578. In the sales column, we will show that the income is 1,800, and in the cost of sales column, we will indicate the 1,200. A credit note for 600 was issued to N-South for goods returned. These goods were sold on the 14th of March. That is before we started recording. If we issue a credit note, we give it to a debtor because they returned goods or because we want to reduce their account. When we sold the goods, we recorded it into the debtor's journal. If we issue a credit note, it will be recorded in the debtor's allowances journal. In the debtor's allowances journal, we will indicate that the next source document will be number 66. The credit note is for 600. That is the sales price. That will reduce the account of the debtor. And we have to calculate the cost price. So the one that we want is 100 divided by the one that's known, 150. And that will give us the cost price as 400 Rand. Received a credit note for 280 for goods returned. If we receive a credit note, we receive it from the creditors. So we receive an invoice when we buy goods, and we receive a credit note when the creditors are prepared to reduce our account, either because there's a mistake on the account or the wrong goods were delivered, or because goods were returned. Therefore, this entry will be in the creditors' allowances journal, because if we reduce the account of a creditor, it will be recorded in the creditors' allowances journal, except when you pay their account. The next number is number 34. In the creditors column, we will show that we will reduce the debt of the creditor. We return goods, so the value of our trading stock decreases. Receive 300 as a final dividend of 60 cents in the rand from the insolvent estate of A. Autumn. That means for every 1 rand that he owes, we will receive 60 cents. For every 1 rand that he owes, we will lose 40 cents, and that 40 cents will be written off as bad debts. For the money that we receive, we will record in the cash receipts journal, because any money received is recorded in the CRJ. The bad debts can't fit into the cash receipts journal or any of the other journals. Therefore, this entry will be recorded in the general journal. So we will record one entry in the cash receipts journal and a separate entry in the general journal. Read carefully what is the instruction. We receive 300. So it's not the debt that's 300. The money that we received was 300. That means that 300 equals the 60% that we received. In the cash receipts journal, we will issue receipt number 123 to A. Autumn, and we will show that we received the money in the till. It's the only entry for the day, so it will be transferred to the bank, and the debtors control will be reduced with 300. We will have to complete a calculation to determine the amount for bad debts. If he paid his total debt, he would pay 100%. The bad debts is 40% of his total debt, because we will only receive 60%. They told us that the money that we receive is 300, and that equals the 60%. So if I want to calculate the bad debts, the one that I want, 40, divided by the one that I know, 60, times the 300, and that will give me 200 Rand. Therefore, bad debts is expense. Expenses increase on the debit side with 200. We have to reduce the account of A. Autumn in the debtors ledger with 200, and any entry that we complete in the debtors ledger will also be completed in the debtors control. So we will show that we credit his individual account in the debtors ledger, and we will credit our debtors control account with 200. Issued a check to high traders in settlement of his account after 20% discount was received. If we issue a check, we pay money out of the bank account, so this entry will be recorded in the cash payments journal. They don't give us the amount that we pay, and they don't give us the total debt. So the only way that we can determine what is the discount and what is the amount on the check is to go to his individual account and determine how much money do we owe him at this stage. In the account of high traders, we see that we have a debit balance of 120. So that means the previous month we paid more than we were supposed to pay, and they actually owe us 120 Rand. Then we bought goods on the 17th. A creditor is a liability that increases on the credit side and decreases on the debit side. The amount of the invoice was 7,200, so it means that we owe them 7,200 less the 120 debit balance at the beginning of the month, and that means that the outstanding amount now is 7,080. Then we received a credit note from them because they are prepared to reduce our account with 280 for goods returned. So we take the 7,080 minus the 280, and we see that the outstanding amount is 6,800. So we are now paying this 6,800 after we receive discount. The debt is 100%, the discount is 20%, and we pay 80%. We calculated the debt in his personal account to see that we owe him 6,800. If we want to see what is the discount, the one that we want, 20, divided by the percentage that we know, 100, and that will give me 1360. So I can indicate that the discount received is 1360. If we want to calculate the amount paid, we take the 6,800 debt times 80, the percentage that we want, over the percentage that we know, 100, and that will give me 5440. So the check will be issued for 5440. We will receive discount of 1360. And that means that the total amount with which we will reduce the creditor will be his debt of 6,800. Receive a credit note from low suppliers for 10% discount not taken into account on an invoice received on the 13th of May. If we receive a credit note, we receive it from creditors. That means that we originally received an invoice for goods purchased on credit on the 13th, and they omitted to deduct the 10% discount that they promised us. So this entry will be recorded in the creditor's allowances journal to reduce the amount that we owe to our creditors. The purchases was 4,000. 10% on that will give me 400 Rand, so it means that I will decrease my creditors with 400, and I will reduce the value of my trading stock with 400 Rand. If you look at the creditors journal, you will see that we bought goods on the 13th from low suppliers for 4,000. That is the amount that we use here to determine what is the 10% that we received a credit note for. Issued a credit note to W. Warm for 70 Rand for goods delivered not according to the invoice. So we give a credit note to a debtor. We receive a credit note from a creditor. So we issued an invoice to him when we sold goods to him. He was not satisfied with the goods because they're not according to the invoice that we gave him. So he was prepared to keep these goods if we allow discount. And therefore we gave him a credit note for 70 Rand to indicate that we are prepared to reduce his account with 70 if he keeps the goods. When we sell to a debtor, we record it in the debtor's journal. If we want to reduce his account, we will record it in the debtor's allowances journal. The next number will be number 67, and we will indicate that we will reduce his account with 70. What is very important is that this will not affect our cost of sales. Because we allow discount to him, it will not reduce the cost price that we paid to the manufacturers. Inventory was not received back, so the inventory is not increased. So therefore, there is no entry for cost of sales. An invoice was issued to Ensal for goods sold at 3,000 less 15% trade discount. If we sell goods to a debtor, it will be recorded in the debtor's journal. The cost price is 100%, the profit is 50, the normal sales price is 150. We allowed 15% discount to him, so that means we only received 85% from him, and that gave us the 2,550 Rand that he will pay. So although the normal sales price is 3,000, we gave him 15% discount, and the amount that we will receive from him will be 2,550. When we calculate the cost price, we have to calculate it on the normal sales price. Therefore, we will say 100 divided by 150 times the normal sales price of 3,000, and that will give me 2,000 Rand. Goods were imported from England for Spring, so we specially bought these goods for a specific customer. We received a cash invoice from London for 8,000, so it means that we paid them immediately 8,000 Rand for the goods purchased. We issued a check for 400 for delivery of the goods. So this is also a check delivered, paid, so it will also be recorded in the cash payments journal. And we issued a cash check to pay for the import tax, so all three of these entries will be recorded in the cash payments journal. When we buy goods, the cost price of the goods plus any expenses paid when we buy the goods from the day that we buy it until it's delivered to our premises will form part of the cost price of the goods. Therefore, the cost price of 8,000, the delivery cost of 400, and the import tax will form part of the cost price of inventory. When we calculate this import tax, we will not calculate it on the delivery fee, it is calculated on the cost price. So the 15% will be calculated on the 8,000 Rand. We will indicate that we bought goods in the bank column and trading stock column for the cost price. Then we issued a separate check for the 400 that will increase the trading stock. And on the 8,000 we will work out 15%, and we will indicate that all three of these entries will increase the value of my trading stock and that it's three different checks. Issued the invoice to Spring for the sale of these goods. So it means this entry will be recorded in the debtor's journal because it's a credit transaction. And we will indicate that the cost price of the goods is the total amount that we paid for the goods. So that's the purchase price, delivery cost, and import duties. They don't give us the sales price, so we have to calculate the sales price. The cost price is the three expenses added together. That will give me 9,600. If I want the sales price, the percentage that I want at the top divided by the percentage that I know, 100 times the cost price of 9,600, and that will give me 14,400. So the sales price will be recorded as 14,400. The owner took goods with a sales price of 900 for its own use. When the owner takes anything from the business, he will always take it at cost price. So we will first have to calculate the cost price. This entry cannot be recorded in the debtor's journal because we are not selling goods to him, It can't be recorded in the cash receipts journal because we don't receive money, so therefore this entry will be recorded in the general journal. Drawings will be debited, so the owner has two accounts: capital when he contributes money to the business, and if he takes money or goods from the business, it will be recorded in the drawings account on the debit side. The inventory account will be credited to decrease the value of inventory, and we will use our profit percentage to calculate what is the cost price. After we recorded all the entries, we will add up the journals and post to the ledger. If we look at the debtors journal, we see that the figures don't appear in both columns. Each one of these figures only appear in one column. That indicates that we have to do two double entries, a double entry at sales price and a double entry at cost price. We are selling the goods on credit, so we will debit our debtors control. The sales will be credited because we are receiving money that is an income for the business that will increase the profits. Cost of sales, we will also have to complete a double entry. We will debit cost of sales to indicate the expense for cost of sale increases on the debit side, and we will credit inventory to reduce the amount of inventory because we sold some of the inventory. In the debtors control account, we will debit the debtor with 20,250 because debtors is an asset. Asset increases on the debit side and decreases on the credit side. And we will indicate that the sales account will be credited with this 20,250. In the sales account, we will record the amount on the credit side and indicate that the account that was debited was debtors control. For the cost of sales figure, we will debit cost of sales because cost of sales is an expense. Expenses increase on the debit side and decrease on the credit side. And we will indicate that the trading stock account will be credited. In the trading stock account, we will record the entry on the credit side because trading stock is an asset that decreases on the credit side. We sold goods, so we have less stock, so we will credit the trading stock account and indicate that this double entry appeared on the debit side of cost of sales. In the debtors allowances journal, we will also have to complete two entries for debtors allowances and two entries for cost of sales. Here the debtors must be decreased because we want to reduce their account, so that means that the debtors allowances account will be debited to indicate that the profit will decrease with the 880, and we will credit the debtors control account to indicate that the debtors owe us less money. Inventory was received back from the debtors, so the inventory increases on the debit side, and we want to reduce the expense for cost of sales, so cost of sales will be credited with a cost price of 540. The debtors control is reduced with the 880 for the credit notes issued. Debtors allowances is debited. Debtors allowance is an expense that will decrease profits. Expenses increase on the debit side, so debtors allowances is debited and debtors control is credited. Because the goods were returned, we want to reduce the expense for cost of sales. So cost of sales will be credited and trading stock debited. Trading stock will be debited with 540 because the trading stock was returned to the business. So it means my stock increased while cost of sales was credited. In the creditors' journal, the creditors will be credited because we owe them more money, and trading stock will be debited because we bought goods and our stock asset increases. Creditors control is credited with the 11,200. Normally you will buy different types of things. That's why you will write sundry accounts or you will write total purchases. The trading stock account was debited. You will write creditors control here to indicate that this double entry was in the creditors control on the credit side. For the creditors allowances, we return goods, so the trading stock account will be credited to reduce the value of our stock, and the creditors control account will be debited, and we will show that the double entry is in the creditors control account. You can either record this as sundry accounts or creditors allowances. In the cash receipts journal, money was received, so the bank will be debited. Sales is an income. Income is credited. The debtors paid us, so it means the debtors decrease on the credit side. Discount is an expense. Expenses increase on the debit side. And if we add up the amount on the debit side of those two accounts, it must equal the amounts that we record on the credit side to complete my double entry. For cost of sales, this amount is not included in another column, so it means that you have to do a double entry. And you will debit cost of sales to increase the expense, and you will credit inventory to reduce the value of your inventory. In the debtors control account, you will indicate that the total amount that will be used to reduce the debtors is 1960. Some of this money was received and will be recorded on the debit side of the bank, and some of this money was for discount allowed, and that portion will be debited to the discount allowed account. So it's very important to indicate that this figure includes bank and discount. In the bank account, you can either show that sundry accounts or total receipts. That means that this amount is recorded in different accounts on the credit side. The total amount deposited into the bank was 23,400. The cost of sales account will be debited with the cost price of the goods sold for cash, and trading stock will be credited with the 16,000. So on the credit side of trading stock, we will indicate that we reduced the stock because we sold goods and cost of sales was debited. In the discount allowed account, the word debtors control will be written to indicate that discount of 160 was allowed. Don't write bank here because this money was not entered in the bank column. So you have to show that this 160 appeared on the credit side of your debtors control account. Cash payments journal will be added. The bank will be credited because we reduced the money in the bank. Trading stock will be debited to indicate that the assets increase. Creditors control will be debited to indicate that we pay creditors and we owe less money to the liabilities. Discount will be credited because it's an income, and all the expenses that we paid will be debited. If we add the amounts on the debit side, it must equal the amounts on the credit side to complete the double entry. In the creditors control account on the debit side, you will show that the liability decreases on the debit side. The word will be bank and discount because this 6,800 is split. Some of the money is recorded on the credit side of bank and some of it is recorded in the discount received account. In the bank account, you will either say sundry accounts or total payments to indicate that the money in the bank was decreased with all the payments that were made. In the discount received account, you will write the word creditors control to indicate that this 1,360 was recorded on the debit side of your creditors control account. Then all the other expenses that you will pay will also be debited. Remember, if entries were recorded from the sundry accounts column, it will be recorded on the date that the transaction took place. When entries are recorded from the totals in the journals, it will be recorded on the last day of the month. So you will show that the totals were calculated on the last day of the month and was posted to the ledger on the last day. After we posted all the entries from the subsidiary journals to the ledger, we have to close our accounts and prepare balances so that we can complete a trial balance to see if we completed double entries for every transaction. If there's only amount on the credit side, then that figure will automatically be our balance. Because it's on the credit side, it will appear on the credit side of your trial balance. Debtors control is an asset. Assets always have debit balances. Therefore, we will add up the debit side first. Then we will subtract all the amounts on the credit side and work out what is the difference between the debit and credit side. And the difference is my balance carried down above the total. So this is my balancing figure. And this balance will be brought down on the first day of the next month below the total to complete my double entry. If I carry on in my books in the next month, I will see that I start with debtors owing me 35,910. Creditors is a liability. Liabilities always have credit balances. So therefore we will add up the credit side first. Then we will subtract the amounts on the debit side, work out what is the difference between the debit and credit side, and the difference between the two sides is my balance carried down above the total. This balance will be brought down on the opposite side on the first day of the next month below the total. Trading stock is an asset, so we will add up the debit side first. Then we will subtract all the amounts on the credit side to work out what is the balancing figure. This balancing figure will be brought down the first day of the next month. As soon as we balance the accounts, the two totals should be the same. The two totals are written on the same line and there are never words written next to the totals. The balance brought down is the amount that we will record in our trial balance. So if this balance is brought down on the debit side, it means that we will record on the debit side of the trial balance 16,660. When there are only amounts on one side, we will add up the amounts and the total amount will be recorded in the trial balance on the same side that the amount appears in the ledger. So in the trial balance, we will show that sales on the credit side is 86,450. In the trial balance, we will show that discount allowed on the debit side is 440. So that means in the trial balance, we will write down all the different ledger accounts that we have. Capital has a credit balance. Drawings will always have a debit balance. So if those are not on the right side, it means that you made a mistake somewhere. Then your liabilities, that's creditors control or a loan, and all your income will always have credit balances. All the assets and all the expenses will always have debit balances. If the expenses and the assets are not on the debit side, it means that you made a mistake somewhere, and then you must go and look for the mistake. We will open a separate debtors ledger for each individual debtor that we have in the business, and all their individual entries will be recorded in their personal account. If we look at the cash receipts journal, we received money and we allowed discount to W. Warm on the 2nd. We issued a receipt number 121. If he pays us money, we will reduce his account on the credit side because the asset increases on the debit side and decreases on the credit side. I will take the 1,600 balance minus the 600 that was paid. That means he owes 1,000 Rand. Minus the 60 Rand discount, so now he owes 940. Then we issued a credit note to him for goods returned. That was recorded in the debtors allowances journal. It will reduce his account on the credit side, so his new balance will be 940 minus 210. That will give me 730. We sold goods to him, so we issued invoice 578. The entries recorded from your debtors journal. It increases his amount with 1,800. So 730 plus 1,800. The new balance is 2,530. Issued a credit note in the debtors allowances journal will reduce his account on the credit side with 70. So 2,530 minus 70 will give him an outstanding balance of 2,460. So for every debtor, we will have a separate account in the debtors ledger, and for every creditor, we will have a separate account in the creditors ledger.